Right. Good evening. Thank you very much for joining us tonight. This is the bottom line. On the bottom line, we say business at the speed of thought. My name is Kwesi Free, and we are coming your way live from our studios here at Rage in Accra. We are live on DSTV channel 277, and we are live on our Facebook pages, Chairman Kwesi Free, and of course, Metro TV News page. You're welcome to the discussions for today, and I'm going to have some financial experts and, of course, some members of parliament to speak to us tonight. It is about the economy, and I'm sure that whichever sector you are, you have been affected one way or the other. You've had cause to comment or to complain or even give explanations to the kind of economic stature in which we are now. So this topic will be of interest to you, whichever sector in which you are. Tonight, we are talking about the economy. The topic tonight is the Ailing Economy, and the Bank of Ghana, after its Monetary Policy Committee meeting today, sets the MPC rate to 17%. It is the highest. Take note that it is the highest in 4 years. Since 2018, we haven't had any change that has come. It's either going down, and it's always around some 50 to 100 basis points. But we've had an increment of 250 basis points to 17% of MPC rate. Tonight, we want to be asking questions of how this will impact on the various sectors of the economy, especially on the banks, especially on traders, importers, and exporters. What rippling effect this is going to have on the dollar and the exchange rate. I'm sure you've listened to the President, His Excellency Nana Addo Dankwa Akufo-Addo, also speak about the rebounding of the economy in the shortest possible time. We are expecting the Finance Minister in the shortest possible time also to come and speak to the whole country about the decisions of the cabinet meeting which was held, of course, also on the ailing economy. However, we've had the Minister of Information give some highlights about what transpired about the management meeting or the economic management meeting, and that of cabinet over the weekend. So we have a lot on our table tonight. You want to stick and stay with us? We will be right back. Well, you're welcome back from the break. So, as I explained early on, tonight is about the economy of Ghana. What do you think of it? How are you faring in it? Do you understand that there are practical challenges that the economic management team or government is facing, and so we should abide with them, and so we should understand what the current situations are? Or you think that it's sheer incompetence on the part of government, sheer mismanagement on the part of government, and so we are heading towards a ditch. We've heard former President John Dramani Mahama also speak especially about the exchange rate, which is a very topical issue in the discussion of economic issues always. So tonight, I have online or on Zoom a former member of Parliament for the Bantama constituency. He was also a member of the Finance Committee of Parliament, and he still speaks on finance issues because he is an expert when it comes to finance. So he speaks on behalf of government on finance issues. Honorable Daniel Ochem Abuaje is our guest tonight. I'm sure you can hear me, Honorable, when I finish the introductions. Yes. Honorable, good evening to you. Thank you very much for joining us tonight.
Good evening, everybody. How are you doing?
I am doing very well. I hope you're doing great too.
Yeah, good to see you. Yes, I am fine.
Right. And then we have John Ewua, who is the Chief Executive Officer of the Ghana Association of Bankers. Chief, good evening to you. Thank you very much for joining us as well.
Yeah, good evening to you, and good evening to all of you.
Right. Thank you very much. And then my own very good friend, Sharif Gali, is the Chief Executive Officer of the Ghana Chamber of Young Entrepreneurs. Sharif, good evening. Thank you very much for joining us online tonight.
Yes, good evening, Chairman. And how are you doing? It's been a long time.
I am doing very well. I hope you are great too.
Yeah, I'm doing fine.
So obviously we'll catch up after the interview. But let me begin this one with We have a number of topics to look at tonight before I allow you to go. We want to look at the MPC rate, which has been set to 17%, the highest in 4 years. We want to be looking at the implications of these tonight. We've had the cabinet meeting over the weekend where there are 5 major pointers where, which is supposed to resolve or bring the economy back to its shape. We'll look at each of these 5 major pointers, and then we'll take recommendations from you regarding the exchange rates, what the business community is saying, what or where we should be heading towards as a country, and of course, some other issues in the economy. So primarily, this is what we are looking at. But let me begin with you, Honorable. 17% of MPC rate. This is the highest in 4 years. Since 2018, we haven't had an increment of 250 basis points of this sort. Are we on the right path?
Well, let me say good evening to you once again, to your viewers and listeners across the globe and my other colleagues on the panel. I think it's a step in the right direction, especially in the short term, because if you look at the fact that the city is depreciating that fast, and you look at the fact that we are dealing with COVID and its effects, they are not out of the woods yet, and now it is compounded by the Ukraine war, and so price of goods and services supply chain is affected, and the US, for instance, is actually increasing its policy rates, from I think 0.25% to about 0.5%, I should say 0.5. And when that is happening, what is likely to happen is that there will be capital fleet. Investors will start taking their money from fragile economies, developing countries such as ours, because they see a better opportunity somewhere. In that case, if you want to attract foreign investors, you want to be able to get money to do what you have to do. If you don't want demand for dollar, or if you don't want people to take their money from your bonds and other things and leave and go away, what is going to happen is that you have to find a way to pay some premium to be able to reduce the demand, which unfortunately in our case, if people are taking their money out of this country, it will have effect on the city. The city is going to fall, and that's going to cause a lot of problems. So because of that, as one of the immediate measures, what you need to do is to be able to avoid or at least minimize how much money is taken out of your country, so that it doesn't affect your currency too much, which will also have other consequences. So as one of the measures to deal with some of the challenges we are going through as a country right now, I believe the central bank is taking the right decision. Even if you go to the US, like I said, and even also in England, they've both increased their policy rates, and so that will have dire consequences on countries such as ours, which I still consider as a developing country. We are not that strong that much to be able to compete that much, or we are having content, or we don't have a lot of reserves, so to say, if you wish, to be able to withstand so much pressure that comes from the external sources. And so I think what they have done is a step in the right direction, especially if they want to really contain the problem right now. I think I support that effect. But one of the short term.
Honorable, measures. a lot of experts had anticipated maybe yes an increase in the MPC rate, but about some 100 basis points, 250 basis points. Is it not too high? Some people think that you are taking economic power out of the hands of ordinary borrowers.
Well, what you have to do, actually, as a matter of fact, the demand and supply, factors will determine what the equilibrium price is. If you could just say, I'm going to increase by 100 basis points to maybe 15.5, from 14.5 to 15.5, or I would just do that, which is going to do the trick. An increase is an increase. And if you do an increase that has no impact, you will still have to live with the problem. So you want to do something that makes sense. And I believe that the central bank has really sat down to consider what to do the trick. what price can we offer to ensure that we are also able to retain some of the funds that are here so that the funds do not flow out to create many, many, many problems for us? So I don't think this is something that they just have to do because they have to do it. They have to do it because we are in a situation that we call crisis. We are in a very serious economic situation that requires significant action to be taken. I believe when the time is right and when things get settled, they will take a second look at what they have done. And if they think the price is too high, I'm sure demand and supply will help them to be able to come down the price. But for now, just so we are able to tell people we ought to pay some kind of premium to be able to keep the money here and to affect some of the, what do you call it, the fleet of capital that will get out of the country to cause us too many problems.
So I'll come back to you, especially on the dollar. The capital flight and being able to retain the dollar in the country so that the inflation rate doesn't gallop as we are seeing. But you are part of the government that has said that controlling the economy or handling the economy was an easy job. Of course, you had the men and you put all of us to your trust. But I'll come back to that. Let me go to John Ewa, who is the chief executive of the Ghana Association of Bankers. For you as bankers chief, 250 basis points. I want to know how this will impact your transactions and your businesses. Is it positive for you?
Thank you very much. Of course, banks exist in an economy. So to the extent that the rate hike would help stabilize the economic fundamentals, it will be good in the short term and also in the long term for all market participants. So banks are market participants. We are part of the general economy. And to the extent that the 250 basis points helps us to reverse some of the lost grounds. And the anticipation is that the transmission will be quicker and that CD assets will be more attractive and to stem the tide of people chasing dollar. And that should have an impact on first the inflation and also the pressure on our currency. To that extent, we as banks, we are very much aligned with the regulator. The regulator takes a long-term view of some of these tools that are available to it, the monetary policy tools, and increasing it by 250 basis points. I believe, when you are torn between a rock and a hard place, you need to assess impact. That will 100 basis points do the trick, or will 150 or 200 or 300 do the trick? At the end of the day, you want to get someone whose interest is in chasing dollar assets to see whether the alternative in the local economy is viable and also, in the short term, profitable and will not be eroded. The gains will not be eroded. And I'm sure they've done a lot of calibrations and sensitivity analysis to come to the conclusion of 250 basis points upward adjustment. Yes, of course, it has its own implications on other market variables and will definitely affect market rates. But to the extent that it helps us address a fundamental, problem, and this helps us to get to the end of having some semblance of stability in the country. You all agree with me that it's important. As banks, we thrive on certainty. And if this helps us to have that certainty where rates are a bit predictable and market fundamentals are stable, we are aligned with the regulator.
But Chief, some people think that for you as bankers, this is business as usual. Once interest rates will go up, they're good for you. And so you will obviously
and that is that is the problem that I think and the misconception that people have. Banks are worried when rates continuously go up, because once rates continuously go up, the probability of default is enhanced. And no bank likes the tendency of customers defaulting because their loans become unaffordable. And again, banks do not make their profits from interest rates per se. We make our profits from margins. So it's the differential between the rate you are paying on your deposits and the rate you are getting on your on your loans, that gives you the your profitability. So to the extent that the lending rate potentially may go up, the deposit will also be repriced. That is the essence of Bank of Ghana's intervention in terms of the policy rate hike. That banks will reprice both assets and liabilities. So technically, in the middle, which is where the banks play, the margins era should not have any significant variation from where banks were operating. So to that extent, banks are not excited at all when rates are going up because we believe in customers taking affordable loans and increasing their ability to repay.
So let me come to you. Thank you very much, Chief. I'll come back to you on that same point. But let me come to you, Sheriff. For you and your team of young entrepreneurs, startups, businesses, SMEs, and so on and so forth, your interest is about the interest rates. Your interest is about exactly the MPC as well. And you need startup capitals. You need money to invest into your businesses, all entrepreneurs in the country. And here we get up today, Monday, an MPC is 17%.
So I hope I'm laudable enough. Thank you very much.
Right, we can hear you very much.
Thank you very much, Akoisi, Chairman, for this opportunity, and then good evening to my co-panelists. So you see, we have to accept that we are in trying times. Our economy is not stable, things are falling apart. As an entrepreneur who seeks to make profit, I understand that, and I appreciate the fact that we are in trying times. The question, however, will be is it the right thing to do? Do we think that increasing our policy rate at this very time or this particular hard time is one of the major things that can help stabilize our economy? I've heard Honorable say something and my brother from the bank association. But if you come to me who does business, and it has been something we keep complaining about, the lending rate in our country, just as compared to our neighbors in other countries like Mali and Togo, is nothing to write home about. Businesses borrow at a very huge or big rate, and we are expected to work within this, make profit and pay back. And here we have our central government at this very moment that things are hard, increasing the policy rate, which will translate to increase in borrowing. So you see, you kind of ask yourself whether our policymakers, the central government, is interested in supporting the growth of entrepreneurs. Because if things are hard and it's very difficult or it's very hard to get capital to start a business or to support or scale up and employ, then businesses will maintain where they are and keep the numbers they have. And that is where we cannot employ. That is where it's difficult to scale up. And these are all little things that we need to bring on board. Akwesi, don't also forget that we are in one more or less one economy or one trade platform for the whole of Africa. That is the AFCFTA,
right? The
Africa Continental Free Trade Area. We are pushing our businesses to compete with people that are borrowing at 13, at 12% per annum and all those things. Now, the question is that, do you think our people can still be able to compete with these guys? And if care is not taken, they will go and borrow at cheaper prices at their very countries and come to Ghana because of ACFTA. And before you realize, our local businesses will be collapsing because they are afraid to go to banks because the rate is too high. So for me as an entrepreneur, I don't think that this was actually the best time, that things are already hard. Businesses are, every single day we keep adjusting. It's just adjusting prices, trying to even push them to our customers. And now this is also going to happen. So it is not a good time at all. It is not a good time at all. But remember, I said that we understand things are hard. We don't only do business, but we also care about our economy. But then I think the rate should have been maybe 100 basis point, not 250. It's just too high, Akwesi.
Right. So let me come back to you, Honorable. And I don't know if you agree with Sharif on that point. And the point has again been made that with this, obviously, you will attract foreign direct investments. A lot of money, and especially dollars, will come into the system as well. But again, these will be foreigners who have had almost a zero interest rated loans or monies to come and invest here in Ghana? And at the end of the day, there will still be the capital flight that you are trying to prevent.
What you need to, and I agree with my brother, the president of the Youth and Entrepreneurship Chamber of Commerce. I think at some point in time we have to talk. I'm also a businessman as well, so I fully understand what he's talking about. I remember when I was in Parliament at some point in time, I asked the Bank of Ghana whether or not there were banks in Ghana. And the reason I said so is because even though the treasury bill rate had come so down, I believe a number of the banks were still interested in treasury bills and therefore were not giving businesses money to expand. But of course, the bank have to do business, you know. So they do what they have to do, given all kinds of rates and other things. So I understand what they're saying, but these are not ordinary times. Businesses will survive in what? Like my good friend and brother said, will survive in an environment. The environment is bad. You can't do business. What kind of business are you going to do? If you're going to do a business where consumer confidence is gone down because prices are high, where there's no demand for your product or service, you collapse anyways. So either way, it's a difficult time. So from a policy point of view, to try to deal with this crisis, to deal with this immediate need, I believe that is what has to be done. In terms of youth entrepreneurship, I believe there are so many opportunities and programs that are there for the youth. That if you look into the budgets very well, especially if you have a young person building a business that is under the age of 35, you can get some tax waivers, some tax holidays. If you go to 1D, 1F programs, you can get a subsidy of about 10% in interest rate expense. The banks are working on the government to do some of these kinds of things. So even though the government is doing this for the macro economy, for the bigger Ghana, ultimately there are incentives that are meant to support young people's businesses. I think my friends should be looking at that as well. So I agree, but of course, it is what it is, and we have to take action. Some kind of decision has to be made, and it's a tough decision. I don't think the LPP government, for instance, is a government that is interested or that believes that the government alone can be the major employer or can drive economic development. In fact, the government believes that the private sector is the engine of growth, and therefore this will not be one of the things that they will pursue to try to stabilize the economy. They will pursue policies that are very, very, very the private sector attractive. That is why when MPP government came to power, they realized that the treasury bill rate, for instance, was reduced from, I believe, some 20%, whatever the point was, as low as it came down to about 12%, meaning that if you are an investor or if you're a bank and have a lot of money, give it to the public, don't give it to me, so that the private sector will actually drive the development. So, but as it is, I think we are in a position where some quick actions have to be taken, and I think this is just one of them. So at the right time, I believe things will be adjusted again.
I agree with you, but let me shift a bit into the conversation on the exchange rate and the free fall of the cedi against the dollar. And we agree that also that the problem is a very structural one. However, you came into power promising that there was the need for higher productivity and a cut in expenditures, a cut in the things that were not productive enough for the country. So the government was going to go into producing more and retaining money here in the country. We have started seeing projects like the 1D, 1F, and One Village, One Dam, and so on and so forth. And so even though there are situations like COVID that's happening, we didn't expect that we would be heading towards crisis like this. What actually is happening, Honorable?
I like the way you actually put it earlier on. Where are the men? You guys said you had the men to deal with it. Where are the men? Let me take you a little bit back. The men are still there and they're doing a good job. And that's actually what gives me hope. I was talking to one of my friends on another platform today, and I said, listen, we admit that we are in crisis, but the alternative is not ending. Because if they were in power, trust me, things would be much, much bad than we are seeing right now. And I say this because if you look at where we started, GDP was about 3.4%. We brought it to an average of about 7% until COVID hits. All right? Inflation was about 15.4. At some point in time, I think it was 8%, single digits. Lending rate, even the government then, before we came to power, was borrowing at 32%. I borrowed at 35% for my business, and the MPP I borrowed at 21, 2019, right? These are the people that dealt. MPP government is the government that basically dealt with the energy crisis, where even to deal with the bad contracts that were signed, these men that I'm talking about resolved that you and I have power for 5 years. We paid about 12 billion just to deal with the effect of bad contracts in take or pay. 26, we paid 21.6 billion the last time I looked to deal with the banking crisis to some innocent 4.6 million Ghanaians. These are the men that fixed that financial crisis. These are the men that ensured that some 1.2 children go to school for free. These are the men that created jobs, even though some people call it extended national service, for some 100,000 young people who were national security risk if they didn't have anything to do. So the men have always, these are the men that raised money to pay the tier 2 that was in crisis or in debt for about 7 years under the previous government. Some 3-point-something billion or so was paid. And again, do what they had to do to continue to fulfill some of our promises, even though not all of them have been done. But for COVID and now Ukraine war, things were getting better. So we admit that, yes, we are in difficulty. We will not deny that because we want to be honest with Ghanaians. It is not all internal. We know COVID and its effects. We know Ukraine and its effect, and the fact that we are also a developing country where basically we are still basically trying to build our economy, and that if you don't take any external wave, some things going on well in America will have effect on you. Ukraine and Russia fighting will have effect on you because you are still fragile economy as a developing country. We are not there yet. America is some 200 years older than Ghana. We are just 65. I'm not saying we should be using that as an excuse not to grow faster. You're also talking about a country where our democracy is even becoming a disadvantage to us because left and right, we are in the middle. No decisions are being made. How do you expect investor confidence to be on the high when even parliament, members of parliament, I should say some of them, are fighting? You think if I'm an investor, yeah, they are fighting over everything. They are removing the speaker's seat. They don't allow the speaker to even sit. Exchanging blows. And you expect me as an investor coming from outside the country to bring my money in when you can't make a decision. And that is why I had referred to, with all the respect to the opposition, and of course opposition is important, that the call for the dissolution of the, the economic management team, I consider that to be a useless call. Because at one point in time, you starve the government of funds to develop the country. At another point, you say, hey, let's dissolve the economic management team if you are not able to support Ghanaians. How do you support Ghanaians when you have denied the government the support it needs? How do you do that? How do you fight in parliament and expect investors to have confidence in your country when you can't make a decision? These are all some of the factors, if you add it all together, that is affecting what is happening. So when you have US, for instance, increasing its treasury rate, or the Bank of England doing the same, and you think investors who are mostly foreign looking at us and say, you know what, these folks can't even get their, excuse my language, acts together. Let's put the money somewhere else. So all these are some of the factors that we take for granted, but they eventually affect the credit risk we have to pay. Right. Confidence is low. When it is low, you don't get money. People lose confidence, they move because you can't make a decision. You think you're hurting the government. You're hurting Ghana. Because at one point in time, you go to the high extreme and say that, you know what, you go out there and mess up the waters, deny the government the support it needs in parliament. And you come downstream and say, resign, or you come downstream and say, who messed up the waters? They call it Anomako Kunekune. So it is a national call. We have to begin to build consensus. After election, Ghana should be put first. We can do all the politics, but when it comes to political issues, I don't think we have to joke with it. These are crises. Let's come together. Let's find a way to solve it. Let's show leadership from all angles, from parliament, from the judiciary, from the executives. Let's spend prudently. Ensure that government expenditure is very efficient.
Right.
So that together we grow the country. And that is just my position.
Right.
But for now, we've got to do what we have got to do. Subsidize fuel, increase the policy rate, and do what you have to do to ensure that we are all able to deal with the problem, and in the short to medium term, begin to take bigger steps. Yes.
As government, you've got to do what you've got to do. I'll come back to Chief to ask you about what the way forward should be. But kindly indulge me. Let me go for a quick break. I'll come back to this very point. What should be the way forward for us as an economy to be able to rebound, especially the free fall of the city? We'll be right back. Welcome back from the break. This is still the bottom line, and we are still live with Honorable Daniel Ochem Abuaje, former Member of Parliament for the Bantama constituency and a businessman as well, Speaker on finance issues on behalf of government. We are still also online with the Chief Executive Officer of the Ghana Association of Bankers, Chief John Ewa, and Sharif Gali is the Chief Executive Officer, Ghana Chamber of Young Entrepreneurs. So let me come to you, Chief John Ewa, on what do you think should we be doing? The practical things. We've been talking about the macroeconomic indicators and the performances even before COVID, and the fact that currently we are rebounding and so on and so forth. The micro, we are now getting into the micro issues and all of the things that come out. But there are practical things that we need to do. For example, I've read that you think once you can be able to pay the school fees of your children, government shouldn't be bothered about that. Government should do targeting and segmentation. But for you, before we come to what the cabinet is planning to do, what do you think we should do as an economy?
Yeah, thank you very much. And there's one point from the regulators' announcement from the MPC report that I wanted to just highlight.
Please go ahead. Please go ahead.
Yeah, the governor reversed some measures which were introduced during the time of COVID. And as an industry, in our view, we thought, given that we are more or less in crisis, those measures were still very relevant, and that they were so important to the sustainability of the things that the banks did, which resulted in Ghana being one of the few countries that did not really record negative or significantly negative growth in our GDP during dependency, particularly at the height of the pandemic. Because banks were very active as a result of the drawback or as a result of the introductions or the measures that the Bank of Ghana introduced, reducing the capital conservation buffer from 3% to 1.5%. Through this MPC report that has been restated to 3.5% to 3%, and also reduction of the cash reserve requirement from 10% to 8%, which allowed banks, to have more liquidity to be able to intermediate and provide financing to businesses and households. Now, through the announcement by the governor today, that has also been increased from the 8%. It was not just reversed to the original rate of 10%, but it's now gone to 12%, which will further restrict the bank's ability to have sufficient liquidity to pump into the economy, particularly not for speculative reasons, but to productive sectors, households that are significantly facing liquidity challenges, and they are going to be impacted. So in one bit, we are addressing some of the concerns. In another bit, we seem to be reversing some of the progress that we have made. And it's an area that perhaps the governor and his team
need to have a real look at.
Yes. But back to your question, in my view, there's one thing we all agree on. I'm not political. I'm a business person.
Exactly.
I speak from an independent perspective. I don't hold or wear any party color or party card. And there's one thing that all of us agree, that the country is not where we want it to be, and that there's a semblance of crisis in our hearts. And in crisis, tone is very important. And tone is what the leadership of the country said, that yes, we recognize that this is the crisis that is facing us, and these are the measures we are taking to address it. One big concern that I had, which throughout this weekend, because of the cabinet, the special cabinet session that the president and his team held, perhaps will be coming out with a statement that will bring about market actions. In crisis, you need to be out there in the market providing assurance. How do you provide assurance? Information must flow. People must know exactly what is being done. And for some reason, in the last 1.5 to 2 months, there was a semblance of quietness in the environment, which did not help and may have contributed to more speculation and people who did not perhaps even have need for dollar, chasing the few dollars that we had in the market, creating further pressures on the currency and resulting in further deterioration in the value of our currency. So I'm just, hoping that the announcement that is yet to come from the meeting will really help to assuage the pressures that the country is going under because of the punishment. We are virtually being punished because from the global business community, they are not seeing a lot from the managers of the economy being done to arrest the situation. I am sure there is a lot being done, but how are we communicating that which is being done to provide a level of assurance that people who are outside the shores of this country, who are not closer to the ministries, who are not closer to officialdom, who have a sense of market assurance. And again, that is my personal view, that we should take a second look. Policies are policies, and after implementing those policies, implementers must have the courage to say, okay, we said we'll do A, B, C, D, let's take stock. Where are we now? Is the policy sustainable? Is it addressing the concerns that we had? Are we on track? Is there some things that must be done to the policies that we introduced? So I am not in one bit saying that scrap free SHS, not at all, far from it. I am very much aware that there are people who really need free SHS. But I am also very much aware that if we really look at the data, which I'm told is available at GES, we really look at the data, perhaps about 30 to 40 to 50% of the existing beneficiaries may not necessarily be people who are needy and who may not be able to afford a boarding education. My concern is the overburdening of an already stretched fiscal space.
Right.
And if we do not take concrete steps to be seen to be addressing them, the people who are not closer to us, and have access to people like Honorable Ochana Bwaji to be explaining to them like we are doing now, they will draw their own conclusions. That from our own analysis, if X amount goes to this policy, Y amount goes to that policy, they are left of X minus Y, and it will not be enough to maybe meet the bond commitments or even to take care of additional borrowings. And that fuels speculations. And these people, when they come into your economy and they get to the point when they have to exit, they are like zombies. They just leave. And your currency may be trading at 5%. When they reach what they call the stop loss level, when they reach the stop loss level and they have to exit, and the CD to dollar is 5-1, and somebody comes and says, I want to exit, and another person quotes, okay, now I have dollar, I'll give it to you at 6. He said, give it to me. Immediately he takes it at 6, the 6 becomes your market rate.
Right.
So you do want to create that semblance of pressure in the economy to create an artificial kind of speculation that will fuel the kind of scenario that presently we are all going through. And that is why I believe that the tone and the talk is very important. Little things, people say, how much are we going to save? But I don't buy that idea at all, because there is no one cost element that is going to give you expenditure means of $10 million, $20 million. It is small here, small there, small there, small there. In consolidation becomes massive expenditure cuts that will help to assuage the confidence that perhaps people may have, lowered and the expectations on the country as well.
Right.
Let me give you a typical example, and I cited this over the weekend. When the Minister of Finance announced a 20% cut in expenditure,
yes,
go back to the international market and check the bond price, the Ghana's bond price. Immediately, market responded. The bond was trading positively on the market immediate after the announcement of a 20% cut. So the next step the market was expecting was, okay, I said 20% cut in expenditure, but these are the specifics we are going to cut. It may mean 100% of this project will not be done. This project will do 80% of it. This one will do 10% of it. The other one will do 90%. In total, it will result in 20% cut. That gives market assurance. And if I am sure as a country we had followed up with the 20% cut, we'll further break down, maybe by ministry, agency by agency, the cost-cutting measures or the expenditure-cutting measures, we would have provided further assurance to the market.
Right.
And the level of punishment that we have experienced in the recent past, perhaps would have averted a greater percentage of it.
All right.
So policy credibility is critical at this stage. We need to be consistent with what we say we are doing.
I am particularly happy about the points you make, especially communication, because I think one of the biggest problems we have, that even though, yes, there are sound policies, there are sound actions to mitigate some of these challenges and crises that we are having as an economy, it is difficult. You would have Honorable Ochema Boaji, even when he was an MP and a member of the Finance Committee, still coming to sit here in the studio to try to explain how government is arriving at certain decisions to the whole country. But this is not typical of the government machinery, and as to whether the machinery itself understands some of these policies that are laid in place. But because of time, let me quickly run to Sheriff Gali. And in talking about the dollar and inflation and so on and so forth, for you as businessmen, for you as entrepreneurs, obviously you import, you export. And there is also the issue about the rates there, which is also affecting how businesses are done there, which is also affecting the dollar rate and so on.
Yes. Can you hear me, Akwesi?
Yes, I can hear you loud and clear.
All right, so thank you. Before I talk about your import duty question, I think I would just like to add this to the main discussion around the policy rate. And like Honorable Try, I think I've been following him. He's one of the persons that tried to explain everything into details. That's good, you are a good politician anyway. So I want to talk about the fact that the business community, and especially the young people who really understand the impact of this increase in the policy rate, will so call on government that it's not too late. Something can be done. We are standing or proposing for 100 base point increment. We are not totally against increment, but increase it at a rate that the businesses will not die out. We all know the impact, the adverse impact of this. So I wouldn't go deep into it because she said time. And I just want to remind central government that recently there's an increment in service charge. The business community accepted it. It's okay. We understand we need to sustain the economy. E-levy for us as entrepreneurs, we don't really have a problem against e-levy. We were only saying that the rate should be increased. So the monetary policy rate should also be looked into. But straight to your question, Akwesi, the high rate of imports, or the higher the imports are going at our various ports and harbors, is very alarming. You see, let's connect this to normal businesses. Somebody listening who is a layman should understand the revision of the benchmark value. What it really means is that there are certain products that the central government decided to discount if you are bringing them into the country. Now, it has been reversed. And that is what is then informing the rate at our port. You go and bring your let's say a car today, and you are paying 20,000 as duty. Then next week, another car comes, same car, same chassis number, and they're asking you to pay maybe 30,000, 40,000. And this is also because of the dollar, because the dollar is rising. So what we can do is that, for me, I've always been on this case because the private sector ourselves were divided on the whole benchmark value thing or reversal. Some of us were saying that, no, take it out so that you can empower the local economies. Those of us importing too are saying that, no, don't take it out. This will influence prices so badly. You see, we need to understand our economy. What is the state of our economy? Is it true that 70% we rely so much on consuming or import? If that is it, let's be honest and accept that fact. We can support the 30% of our local industries to grow and at least merge up gradually. But if we just want to say that, no, we want to empower the local industries to produce so that we wouldn't be so much dependent on imported goods and all those things, when we do not have a clear plan or a plan as a people, then at the end of the day, we will not be able to achieve any results.
Right.
Things will keep going higher, and then prices will be like this. So we will need to really look into this. For me, I think the benchmark volume, I'm sure government will do something. I believe from this emergency cabinet meeting, we'll hear some of this, good news around those things. Yeah.
I wanted to give at least 30 seconds to each participant, but unfortunately, our time is up and my producer is on my neck. However, Honorable, if you are here, I'm sure you were trying to make a point on Dr. Sharif's. I'll give you the 30 seconds and then we can end with that.
Yeah, I think, let me just take the 30 seconds this way. I think let's hope. Yeah, we will not deny the fact that the country is a little bit in crisis or much, what do you call it, going through these difficult times. We won't deny that. But I believe that what the government is doing is an attempt to try to deal with it. We also have to try to find ways to minimize or reduce the rate at which the price of fuel is increasing, because that affects almost everything. Somebody was telling me, why is cassava price going up? And I said, come on, how do you get cassava to the market? How do you get cassava to the market? And so I believe they're on top of the game, and let's just give them all the support they need. Let's build consultants.
So Honorable, should we be expecting some subsidy? I'm going to say, sorry, I'm taking your work.
Is that going to be some subsidy?
If I were to advise the government, yes, subsidy is important. As a short-term measure, but ultimately
because it's coming from you,
all right.
expecting it.
All right. And Honorable, I do hope that there were very salient points made by the Chief Executive of the Ghana Association of Bankers. Number one, sustainability of the policies and programs. Number two, communication. And number three, the tone. I do hope that you are going to take that into consideration. And of course, the advice from Gali as well.
That's well noted. Yes.
We have the video from Cabinet. We'll end with that. Thank you very much, gentlemen. Honorable Daniel Ochema Boaji is a former member of Parliament for Bantama Constituency. Chief Executive Officer of Bankers Association is Chief John Ewa, and Honorable Sharif Gali is the CEO, Ghana Chamber of Young Entrepreneurs. My name is Kwesi Afri. I did the presentation for you tonight. Let's see the video, and of course, we wrap up with that. Good evening.
It's true. Over the last weekend, the executive branch of government, led by the president and his ministers, had a cabinet retreat. It's a regular retreat, one done every quarter. But this retreat had the opportunity to look at some of the emerging economic difficulties globally and how they are affecting Ghana. And the president has made a number of decisions. One, he's made a decision on the borders, when to open the borders, the residual preventive systems to put in place at the borders to ensure that while the borders are opened, we still don't have infections crossing over from our borders into the Ghanaian jurisdiction. And again, while the borders are open, we're able to protect our populations from the risks of insecurity from the northern frontiers. Two, the president has also taken some very bold decisions on the currency. And the currency, as you know, is managed first by the central bank, but the broader economic managers also have a role to play. So the central bank today, Monday, after its monetary policy committee meetings, which are even taking place before the cabinet retreat, will announce its measures on what it plans to do on smoothing currency transactions and reducing pressure on the cedi. But later in the week, the finance minister will also give an update on what central government is doing to shore up the currency. This is all part of short-term measures, even as we work towards the medium and long-term measures aimed at boosting the strength of the Ghanaian cedi.